Hey everybody, welcome back to the channel. Today we're gonna be talking about real yield in crypto. So if you're ready to dive into one of the most controversial topics in crypto today, then let's go ahead and get into it. If this is your first time joining us, we are your daily crypto wrap-up. We cover the entire cryptocurrency market. If you like to stay up to date with everything going on in crypto, make sure to hit that subscribe button. Today we're gonna go over what real yield means. We gonna talk about how to find projects offering real yield, and we lines even share some of our favorites. So first off, let's explain what we mean by real yield. In traditional finance, when you invest money, whether that be stocks, bonds, real estate, etc., you generally do so with the expectation of receiving some kind of return on your investment or ROI. This can be done in a few different ways. The first way is through dividends. Dividends are usually paid out to shareholders from a portion of the company's profits. And while they're not guaranteed, historically the S&P 500 has paid out an average dividend yield of 4. Since this is a broad market index fund, this is a pretty good starting point to compare against. The second way to receive a return on your investment is through price appreciation. This is exactly what it sounds like. You buy an asset and hopefully over time its value increases, allowing you to sell it for a profit. And the third way to generate returns on your investment is through interest. This is very common with things like bonds, where you essentially lend out money to a company or government in exchange for regular interest payments. When it comes to crypto, things are a little bit different. Most cryptos don't pay out dividends since they aren't technically companies. Some projects have experimented with this, but it's not super common. Price appreciation is also a possibility, but it's not something that you should be banking on. After all, investing in crypto is considered to be quite risky, which brings us to the most popular way of generating returns in crypto, which is through interest. Interest-bearing accounts are offered by exchanges, wallets, and other platforms that allow users to earn passive income on their holdings. Some accounts pay out daily, others weekly, and then there are some that pay out monthly or even quarterly. When it comes to interest rates, they can vary quite a bit depending on the platform, the coin, and the amount that you're holding. Generally speaking, it's not uncommon to see interest rates of anywhere from 6 to 12% on stable coins. For larger sums of money, some platforms will even offer custom rates, sometimes upwards of 30% or more. Now before we move on, we need to address something. With interest rates being so high right now, many people are calling any interest rate below 7% low yield. So if this is true, does that mean that every single interest-bearing account in crypto is low yield? Well, not necessarily. That's because it really depends on the asset that you're holding. For example, with the US dollar paying out 5.3% on a one-year treasury, would you still consider 7% to be low yield? The answer for most people would probably be yes. But if you were holding Ethereum, Bitcoin, or just about any other crypto besides a stable coin, then 7 could actually be considered quite high. This is because these assets typically don't have any sort of guarantee that they lines increase in value. If anything, they could easily drop instead. That being said, interest rates shouldn't be the only thing that you look at when choosing a platform. Security is just as important, if not more so. So here is a simple guide that you can use to help you decide what constitutes as real yield. If you're holding a stable coin, then a good rule of thumb is to aim for a rate of 6% or higher. If you're holding any other crypto, then 8% or higher might be worth considering. Of course, this is just a general guideline and you should always do your own research before making a decision. Alright, so now that we know what to look for, let's talk about where you can find it. There are 3 main places to look when searching for real yield. First is on exchanges. This is probably the most convenient option since you can often sign up for an account, deposit your funds, and start earning interest all within a few minutes. The downside to this is that the interest rates tend to be lower compared to other options. Second is through wallets. Wallets generally offer higher interest rates than exchanges, but they can be a bit more complicated to use. For example, you might need to stake your coins in order to earn the highest rate, or you might need to lock them up for a certain period of time. And third is through DeFi. DeFi, or decentralized finance, is a newer option that has become increasingly popular in recent years. It allows users to earn interest on their coins without having to use an intermediary such as a wallet or an exchange. Unfortunately, DeFi can be quite complex and the interest rates can be quite volatile. When choosing where to earn interest, it's important to weigh the pros and cons of each option carefully. There is no one-size-fits-all answer, and the best place for you will depend on your individual needs and preferences. Let's quickly share some of our favorite platforms for earning interest on our stable coins. BlockFi is a great option for beginners since it's very easy to use and the interest rates are quite competitive. They also offer a wide range of supported coins and they're fully insured. Nexo is another solid choice. They offer some of the highest interest rates around, and they have a wide range of features including a credit card with crypto rewards. And finally, there's Gemini. They're a well-established exchange with a great reputation, and they offer competitive interest rates as well. Plus, they have a lot of resources available to help you learn more about crypto. And remember, if you're holding other cryptos like Ethereum or Bitcoin, then you'll want to look for platforms that offer higher rates. With that being said, it's also important to keep in mind that interest rates are constantly changing. So it's important to do your research before committing to any one platform. There are also a number of factors that can affect the interest rates that you earn. For example, the amount of money that you have deposited, the type of coin that you're holding, and the overall market conditions. As a result, it's important to be patient and wait for the right opportunity to earn the highest possible return on your investment. For example, right now is probably not the best time to deposit money into a stable coin interest-bearing account since the market is in a bear trend. On the other hand, if you're holding Ethereum or Bitcoin, then this could be a great time to take advantage of the lower competition and higher yields. Another factor to keep in mind is that not all interest-bearing accounts are created equal. Some accounts require you to lock up your coins for a certain period of time while others don't. Those that do offer higher interest rates, but they come with the risk of your coins becoming illiquid. Finally, it's important to keep in mind the fees that each platform charges. Some platforms charge absolutely nothing, while others may charge a small fee for depositing or withdrawing funds. So, to summarize, real yield is a term used to describe the interest that you can earn on your crypto holdings. The amount of interest that you earn will depend on the platform that you use, the coin that you hold, and the amount of money that you have deposited. When choosing where to earn interest, it's important to weigh the pros and cons of each option carefully and to do your research before committing to any one platform. Thanks for watching today's video. We hope that it has helped you learn more about one of the most popular topics in crypto today. Remember to hit that subscribe button so that you never miss another video, and as always, we'll see you tomorrow.